And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the market forecast for Monday, June the 27th. I'm John Hoagland. Thanks for trusting me with your time. Well, we got a whole nother week here, another chapter in our book of trading this year. As always, I'm going to start out a little bit slow on Mondays. It's my MO. I tend not to do well on Mondays. If you are in the markets already, hopefully you're doing well. I got a big dog over here moosing me to get pet. Lacey says, good morning, everybody. Today is National Sunglasses Day. We're going to need it around here. Looks like we're going to have a very sunny day here in Chicago. Hopefully the weather's nice where you are. As always, our focus is always looking for accurate context, thinking about risk management, and always remaining patient. See, economic numbers this morning. We had durable goods orders came out, kind of mixed. They were looking for 0.3 in the core durable goods month over month in May. Came out 0.7%, but they did revise the last release lower, so a little bit of information to digest there. We are also waiting for, at 10 o'clock Central this morning, the pending home sales, and we've got a relatively busy week as far as economic numbers are concerned. Tomorrow, international trade and good, wholesale inventories, Case-Shiller home price, and consumer confidence. Wednesday, GDP due out. We also have Chairman Powell speaking at 8 o'clock Central Time on Wednesday. Thursday, jobless claims as usual, personal income and outlays, Chicago PMI, EIA Petroleum Status Report, and we do have the EIA Petroleum Status Report on Wednesday. Thursday is nat gas, so it looks like things are going back to normal as far as the EIA and their releases. We had a little hiccup last week. And then Friday, of course, PMI manufacturing, ISM manufacturing index, and construction spending. So some relatively important information coming out for us this week. As far as this morning, U.S. stocks are set to open a little bit higher. After a nice rebound last week, traders are mulling, is the bottom in, or is this just a pullback? We're going to see all this on the charts. Coming up, the G7 meets trying to stymie Russia's revenue, who now has officially defaulted on debt, their first time in over 100 years. 1918 is the last time Russia defaulted on debt. And crude traders anticipate results from the G7 and the OPEC meeting. The OPEC meeting ending on Thursday. And of course, we'll be looking forward to the EIA Petroleum Status Report, which we did not get last week. It's going to be an interesting one. As far as the VIX is concerned, VIX is up 3.5% last I checked, 28.18. I wonder what's gotten into the VIX. Dollar index down slightly at 104.10, and the yield on the 10-year creeping back to the upside, 3.2%. As always, make sure you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome here on the forecast. You can subscribe to our YouTube channel so you get notifications when we do go live. Today is Monday. We are going to have group coaching at 1 p.m. Central. I just put in the link that you can get registered. And I look forward to seeing you there. It's going to be an interesting session. We had Ute is asking for more information on something we talked about last week or the week before on, what it takes to be a successful or at least a profitable trader. I mean, it's a lot of self-knowledge. It's a lot of market knowledge. Mix those up and add some process and strategy to that, and you can, and I believe most of us can. I think we all have it in us to be profitable traders. I'm not talking about making millions. I'm talking about making money in the markets I think it's possible for just about anybody. A lot of it is we just tend to stand in our own way. We're going to discuss a lot of that today in group coaching. Good morning, Brian. First one in the room. Tachyon. Good morning, Shaw. Tachyon, just survive another day. That's a big part of the game. Some of the people that I've worked with in personal performance coaching, that's really the goal, is to bring them to a level of sustenance where they're going to be able to maintain that account for a very long time, as in like forever. And that to me is a level of success that a lot of traders don't even think about as success. Just being able to maintain that account is a degree of success, and there's lots of different degrees of success when it comes to futures trading. Comes down to it, the bottom line is the real judge, but there's a lot of steps and a lot of successes that we can achieve before we even get to that level. So we're going to talk a little bit about that today in group coaching again. I Print Money, love that name. Scott Saw, Conquered. Will Doherty, Theo, good morning. Chris. Grim Reaper, good morning to you. Dan Trader, Jordy, Bill Phillips, my brother Rick, love you. Sarah Hall, good morning. Prayers and love to you as well. Kevin Guy, Dimitar, good morning. Frederico, Vince, good morning. Glitter Sandwich, Jesus, good morning. Patrick, Rob T, Terry King, Joe, good morning to you. You're back to your old self. Anissa, Melk, Frederico, yeah, first time Russia defaulted since Lenin was alive, right? How about that, huh? Good day, dead letter opener, Brian Hardwork Hogan. Good morning to you. Happy Monday. Good morning. Back from my cruise last week, ready to get back at it. Well, take it easy, the Three Lions. If I find I get too excited when I come back from vacations or some time off, I tend to get a little bit ahead of myself. Just stay calm, stay patient, look for the right opportunities. And good morning to Chris Hayes. Trading Research, good morning. All right, so we've got group coaching today. We've been through all the stuff. I know we're wondering what's going on with the VIX. I mean, S&Ps are higher, or at least they have been. We're going to see that now on the charts. Let's take a quick look into the daily in the S&P. And get started with these charts. Okay. Hang on a second here. I got a mess going on here. Okay, so here is the daily in the S&Ps. First up week in 4 last week. 3 down weeks, and then last week he had an up week. Did pretty well. Came off those lows. A lot of people wondering, is the market going to continue higher now, or is this just a pullback? And of course, nobody knows that for sure. But what we do know is the volume on Friday wasn't all that exciting in futures, although it was pretty good in the New York Stock Exchange. That late spike we put in on Friday afternoon really juiced the volume in New York. So that's encouraging. And we did add 1,800 estimated in open interest on this push to the upside on Friday. Not a big number for the amount of price range that we put in on Friday. But the market is now set for continuation to the upside. Again, open interest is a little disappointing. Volume was just okay. We did fill a gap from June 10th to June 13th on Friday. We've got another gap just above here. The base of that gap, and these are regular trading hour session gaps, 39.58 and a quarter, 39.58 and a quarter, right about here, all the way up to this low, I think, is where that gap is. 40.1475, 14.75. So a little bit, yeah, that's about the gap close. So weak upside structure here, I should say downside structure, seems to be bringing price to fill in those areas, to repair those areas, if you will. Are we going to get up there? I don't know. Again, the base of the next gap to the upside is 39.58 quarter, 39.58 quarter. So about $10 above where we are now. Let's take a look at the 30-minute chart here. Here's the 5 o'clock last night open. We did end up a little bit long in overnight inventory. I'm thinking that this move back into the range from yesterday is about enough to even out that inventory. The one beautiful thing about the opportunities we have today is we put up a late spike. The late spike here on Friday, if we were to look at it on the TPO chart, there it is. Bang, bang. And we did close in it. So 39.16 quarter. Oh, we're on the wrong profile. 39.16 quarter. Here it is. There's the big late spike. 39.16 quarter is settlement. So we did close in the late spike. So what are the late spike rules? The late spike rules are if we open above or even inside the late spike. Opening inside the late spike is acceptance of higher pricing. Opening above the late spike is certainly acceptance of higher pricing. Nothing is 100%, and anything, of course, can happen. ACH, anything can happen. It just gives us the reference and the context to say, okay, this market appears to be accepting higher prices. Last week's high is we're trading about there right now. If we open with the spike, with a gap above a spike, and we can't close the gap, I'll be looking for opportunities to try and buy weakness, to see if this market can continue its move to the upside. If we open with a gap and we come back into range and value, that changes things a little bit. We've got the base of the gap here. The base of the late spike here, 3,900. 3,900, base of the late spike, right down here, which puts us back in value from yesterday. That's kind of a tricky situation, because if we accept value and reject higher pricing, the price could move all the way back to the low of value. So we've got a couple of different situations. If we open with a gap, the first thing we're going to be looking at is, are we closing the gap relatively early? If we're not, we're looking for opportunities to buy weakness. We can test down to the base of the late spike, 3,900, and at that time be monitoring for acceptance of value from Friday. So this area down here is going to be tricky, but I'll bet you there's some big fish there if we get there. If we'd never even close the gap, if we open above the late spike and move higher, that would be kind of expected results. For what we know, for what we hypothesize, and we can't close the gap, we open above a late spike, the market is telling us that it's accepting higher pricing. Anything, of course, can and usually will happen. Take a look at crude oil now. We're just about ready to open up. Here's the daily in crude. We've got a little bit of a head and shoulders forming here. We got a shoulder, we got a head, we got another shoulder. So we are kind of forming in this area of balance that we were kind of back in the middle of May in this area of balance. Volume and open interest kind of weak on Friday. Lower volume, open interest. We lost 2,000 in open interest. So this push to the upside is more about probably covering shorts than bringing new buyers into the marketplace. So that gives me some confidence as we stay inside the weekly kickoff range or the high and low from last week to look for opportunities at those extremes. We didn't get our EIA information last week, so we're looking for a lot more information from crude fundamental information. We've got the EIA, we've got the OPEC Plus meeting going on this week. It's going to be an interesting week. I'm going to try and stay patient inside the range here. Anything at the extremes, I think, is fair game. Oodles of information, oodles of fundamental information this week. And oodles is an industry term. All right. Here's the 30-minute. We got a bear flag here that provided a big opportunity. We got another bear flag forming here. 109, 109.50's weekly kickoff high. We've got our weekly kickoff low here at 102.40. Where are we? Well, we're in range. We're in value. I don't really see that we have... we do have some overnight inventory to the long side. The market opened here last night. It's trading here. But again, inside range and value. I'm going to have to try and stay patient. Not looking for anything to happen really early. Looking for better trade locations as the day goes on. And again, we're still, in a situation where we may just be kind of waiting for the oodles of information that we do have coming out this week. Here's the first minute opening range. So say 27 ticks. Taking out the high of it by a couple of ticks here. Not really looking at getting into the opening range trade here, although it looks like it's bouncing pretty good here, showing a little bit of momentum and confidence to the upside. What's that look like on the 30? Getting up near our overnight high, which is above value from yesterday. Our upper extreme of balance is up here somewhere, so... if we are going to be looking for better trade locations as the day goes on, we may have an opportunity up towards this trend line / weekly kickoff high. Hey, Matt. Matt's talking about the S&P is putting up some end of the quarter window dressing, making things look good, huh? Tachyon, there's a delta divergence on S&P on Friday. Let me take a quick look at that. Delta lower on higher pricing. Good eyes, Tachyon. Nasdaq. All right. Volume, again, low. We'd lost 6,600 in open interest, so a little bit of a different story in the Nasdaq. This was a short covering pop where the S&P's added just a little bit, like almost inert amount of open interest. Again, volume was pretty low in the Nasdaq. Again, the underlying commodity, the New York Stock Exchange, put in some pretty decent volume on Friday, so I'm thinking that the Nasdaq shares did much the same. So we're looking like we're going to be heading higher. Well, on the 30-minute chart here, we do have a late spike. The base of this late spike is 12,8250. It's the high of this bar here, 12,8250. Again, if we open above it with a gap and can't close the gap, that's marking acceptance of higher pricing, and we may see this market continue to move higher. A failure at the base of the late spike here puts us at value high, which could create a value area special situation play, which may bring at some point in this session price back to the low of value from Friday. So we've got some tricky areas here, but I'm thinking there's some good opportunity in our equities today just because of the reference and because of the opportunities that we have in the nuances we're seeing. That nuance of opening above the late spike is a friendly upside move, is a friendly upside nuance. If we can't close the gap, that's also a friendly upside nuance. Getting to the base of the late spike to the high of value is also another upside nuance. It's accepting value from Friday where we come into trouble with our hypotheses that this market may continue to move higher. So there's lots of references here. It allows us to limit risk. I'm excited about the trading day today. Gold. What can we say about gold? It's just range-bound, rotational, balanced, choppy, short time frame controlled. Added 900 in open interest on Friday. Lower volume. There's not a whole lot to be excited about here at this moment. At this very moment, we're centrally located between weekly kickoff high and low, between last week's high and low. Our little tennis player is just kind of standing there mid-court looking for which side the ball's going to come to. I'm really not that interested in doing anything in this central location. Here's what we're looking at in the 30-minute chart. We've got settlement at 1830.30. We opened the session here. We are here. Do we have any real overnight inventory? It looks more flat to mixed to me than looking like we've got a whole bunch of inventory. We've opened. I don't think we've left a gap here. The value low or value high from Friday, settlement, and point of control here. This is kind of a high target area. We've already kind of looked into it and rejected. And if we continue to reject the range from yesterday, well, we could really kind of go into a value area special situation play from Thursday's action, because we did open outside of it. It's not really a true value area special situation. But if we do find that we're accepting higher value, this is a visual that can bring price to the high of Thursday's value area. Market's already kind of testing into that value area now, and if we do accept it, we are rejecting range from Friday, maybe re-accepting value from Thursday. It's very difficult for me to trade this market because I don't see any real clear nuances. It's offering lots of trade locations against short time frame levels, but if you don't pick the right one, you can pick 4 of them and have 4 losses before you find a decent trade. And is the range going to be great enough to do that? That's my question. If we do have an opportunity against a short time frame level, how many short time frame levels are we going to have to trade against to find the one that's going to pay us? And is the range going to be big enough to pay us if we've had 2, 3, even 4 losses leaning on short time frame levels here? We got 3 short time frame levels right here that just looked supportive. Now I'm stuck trying to hold in and trying to find a pullback in this. Where's my risk? It's a challenging market lately, if not always. These markets are always challenging, right? Here's the euro. Similar sitch as gold. Balance, short time frame control. This morning we were kind of centrally located inside last week's range. These pink lines or purple lines are last week's range. Weekly kickoff high and low. 107.18 is the upside. 104.45 is the downside. It would close them in just a little bit because of the situation of the range bound activity that we're in, creating the opportunity to even out inventory, which I believe that's happening in gold as well. It's just making things harder for the day trader. Volume and open interest. Volume slow on Friday. Open interest, we lost 700. Both of those I'm viewing as inert. There's no power there's no energy or power inside those numbers, so we don't really have that much to work with from open interest and volume either. What are we looking at in the short time frame? Okay, we're looking at a short time frame control. Overnight inventory was a little bit long. Here's where we opened. Here's where we are now. So we are kind of accumulating some longs. No gap. We're appearing to be rejecting Friday's range, which could put us at test of the overnight high or last week's high. At the very least, the value high from Wednesday here. But again, it's difficult because I don't have anything. It's almost like there's even nuances for the long side and for the short side. I can create a hypothesis. I can create a reason for either, which tells me just be patient. Wait for better trade location as the day goes on. Challenging. Gold and the euro, tough markets. Not that any of these markets are ever easy, but here's the 10-year. Rates have now continued to creep higher, so we've got price coming off. Last week's high, last week's low, right in the middle. So again, our little tennis player is waiting for the next volley. Is it going to be higher or is it going to be lower? Your better opportunities will be at the extremes. I'm calling the extremes last week's high and low. We've got a little space up above with weekly kickoff high up at 119 and 30 seconds. Volume low, open interest. We added 22,000 on Friday, but that's not a huge number for a market that is as deep and thick as the 10-year. Take a look at the 30-minute chart here. We've got overnight inventory to the short side. We've opened with a gap. We got rates creeping higher again. We've got a gap fill here. We've got another gap to fill down here. If we're going to be going into repair, it makes sense that we will finish this gap close and that we may come down and finish this gap close today. The market's already headed that way. Remember, we do have some short overnight inventory, which if they start to get nervous, if they don't get what they're looking for, and that's continuation to the downside throughout the day, they can turn us around and give us another opportunity, or perhaps a better opportunity to look for shorts. Anything else here on my notes? Just a lot of weak structure that we could really just go back and repair. We get the gap here. We still have some of this gap here with which to fill up or close in regular trading hours. And again, we're right in the middle of the area that we're calling balance. Not really the best trade location. Now, I'm looking at this in a kind of a bit of a longer time frame than perhaps many of you are. But I think it's important to really look at the longer time frame to get good trade ideas in the shorter time frame, of course. Natural gas. Strong volume on Thursday and Friday, even though Friday was a very small range and ended the day in a doji. We had some pretty decent volume, only adding 500 in open interest. So it's not like we were seeing a whole bunch of selling and new selling coming into this market. It seems to be seeking to find some kind of a bottom. Last week's low, supportive almost to the tick last night. Take a look at the 30-minute chart. Last week's low. Where are we? Well, we opened in range and in value, indicating a higher probability of better trade locations coming after the open. At some point during the day, we may find our best trade location, and it with a high probability won't be the opening range. So I'm thankful that I don't trade this market because it is vicious. But we're kind of settling into a balance here. The extremes, value high from Thursday, high of the day from Friday, the lower extreme, low of the day from Friday, and of course our weekly low from last week, which is already in the overnight proven to be supportive. I mean, this is the 5 o'clock number, and this is the 5 o'clock open, and there was a pretty good knee jerk there. Who knows what that was about? But remember, it's one of the thinnest periods of the day in any of these markets is right at that 5 o'clock p.m. opening. So look for better trade locations as the day goes on. We've seen support down near last week's low. We got a weekly kickoff low down there, 574. And weekly kickoff high is up here at 724. Be patient. Be patient. This is a marathon. It's not a sprint. I'm constantly reminding everybody to be patient, and it's so important to. I mean, patience pays. Even Warren Buffett says the stock market is a tool for the patient to take money from the impatient. It's only Monday morning. There's going to be opportunities throughout the week. We don't know what's heading our way, and we don't know what kind of good opportunities we're going to be able to find as the week goes on. So, again, like Tachyon says, it's try and, maintain, be here for tomorrow, make some money, and look forward to an interesting week. Uh, we've got group coaching, make Hogue money tomorrow, group coaching on Wednesday, make Hogue money on Thursday. We're going to have lots of opportunities together to see if we can't seek out some of these decent opportunities, these asymmetric opportunities where we're risking a little bit to make a lot more than we risk to take the trade. That to me is my edge, because I don't take trades unless I can reasonably and probably expect 2-to-1, 3-to-1, or more profit greater than the risk I have to take the trade. So, Dean, I don't have time to do much more than what we're looking at already here this morning, so I apologize for that. Rusty Golfer, my spirit animal, good to see you. Good to see you, Mr. Hoyt. Tachyon, peace. Anissa, thank you. All right, let's take our deep breath. Stay humble, grateful, and creative in your trading today. Looking forward to seeing everybody in group coaching, and again on the recap at the end of the day. Don't forget to join me there. And let's see what our heroes do today on As the Markets Turn. It's almost like watching a soap opera. So, and we get very invested in that soap opera. So take it easy. Look for the good trades. Don't go looking. And they'll come to you. Trade well today. Be kind to yourself, be kind to others. Say a prayer for peace, and I will see you in group coaching. Have a great day.